All right, guys, this is Paul Singh, the Market Speculator, with the trade report for May 6, 2019, Monday. We've got some excitement in the streets as the market reacts to President Trump's weekend tweet about the Kentucky Derby decision. No, I know, bad joke. Really, it's about China here, basically saying he's going to increase tariffs and go from 10% to 25%. At least that's what he's saying right now. Who knows? The reasoning behind this, is this just a tactic against China? Is it part of negotiation? Who knows? Whatever it is, the market is reacting. That's all we really care about, whether we agree or disagree about what's going on here. We have to see how the markets are reacting. Futures yesterday were down even more than they are right now, but settling in with SPY around 1.5%, NASDAQ close to 2%. These are those things that we can't predict, that just happen, come out of nowhere, and now we've got to react to that. This is part of swing trading. Now the process of what we're going to be looking for today. I just sent out a tweet, and this kind of lays out what we're doing today, and that is watching key support levels. You guys who have been with me for a while know we always do that, especially on these types of days. Throughout the day today, now we're not going to start with a focus list in the morning outside of the ETFs, but we want to see what stocks are holding up today, relative strength. We want to look at what stocks are getting hit the hardest, especially the momentum stocks we've been watching. Which ones are holding up well, which ones are not. And we're not really talking about safety stocks like Dow type stocks. We're talking about the momentum stocks. Which ones are holding up, which ones are getting hit. We know the Dow stocks are going to tend to be kind of flight to safety. Gold is going to tend to be a flight to safety. We're focusing on the momentum stocks. We're going to narrow what we're watching, to ETFs, maybe the FANG stocks, and then some of these relative strength and weakness stocks. You want to be able to make good decisions, and you don't do that by watching 300 stocks. And then we prepare for multiple outcomes. We don't know what's going to happen right now. Maybe the market's been pretty resilient to all kinds of stuff going back to the last couple of years. So does the market just get a little scared and then come right back up today or tomorrow? Or does this support level break continue downwards? We really don't know. We want to be prepared for the different things that can happen and be able to react to that. So that's what you should be doing today. And basically what we're doing is managing our current positions. And we've got 5 of them right now. We were starting to get more bullish as the market was looking really strong, and then this happens. So don't panic. It's not the end of the world. There's no blood on the streets, even though you might hear that on CNBC. Don't worry too much right now. And then if this truly is a big meltdown, we'll be able to profit from it, just like we did here. This was one of the best times of the year for us when the market was tanking last year. So we don't really care what happens. We're just prepared for what happens. So that's kind of the plan and the outlook you should be having right now. Let's actually look at these levels. If we look at SPY here, gapping down. Now, if we take things from a long-term perspective, this 1.5% gap down isn't a huge deal. I mean, considering how far we've moved since January 1st, or even since Christmas here. So, we're gapping down to here. What are the key levels we need to be watching? There's a couple of them. One is the old high, not necessarily the old high, but this old pivot level right here, which the market also gapped to here, and it corresponds with the moving average. So we'll just say the moving average here at 285. If we continue down here, we want to see this level hold. If that breaks, obviously the 200-day moving average will become very important. Now notice this 285 level also corresponds to ranges back in here. So 285 is going to be a key level for us if the market continues down. So that's one support level. Then the other one is going to be right where it's gapping down to in the morning, which is right around 289. Intraday, do we hold this level and start to reverse? That would be awesome. That's what we, being in 5 positions, that's what we want to happen. But does this level hold? And if it does, can we fill the gap that has been created? So these are going to be the 2 key levels for us right now, short term. So we're going to watch those levels. Qs, same type of deal here. We're watching the old high, which it's gapping down to right now. Can we hold that level? And it's easy to see because this is where we tested price last week. So basically right around 186.50, can we hold that level? And technically The number here is 186.87. Do we hold that level? We're opening to about 187.60, so we've got a little room there. And then again, if the market does reverse, we don't know what's going to happen today, but if the market does reverse, do we fill the gap that's creating today? So that's what we're going to watch for. And then, we just as we were seeing, small caps start to show strength, we get this today. Now, small caps are just basically going down to Friday's low, so not too bad. And we're going to see here, does it hold this gap fill? And then obviously these key moving averages. So that's what we're watching now. Oil is getting hit hard this morning as well. Does it hold the 50-day moving average? And then we're going to look at just some of the sectors we've been watching. How do financials hold up? And we have no idea which ones are going to hold up well today. How do home builders hold up? How does semiconductors hold up? And the booming sector, software, how does software hold up? And then we're going to continue to track. I'm going to watch very closely these stocks that broke out on earnings this quarter. How are the earnings levels holding up? So, when something like BCO gapped up here, does it hold its level here? Does LMT hold its level right here? So I'm going to be watching for that closely today. These are some tells we might be able to get to see how the market is reacting. So that's what we're going to be doing today. Let's look at our current positions and look at stop levels on these positions. So we have SPXL, we're long. SPY, entry for SPY is at 50.60. And after being up quite a bit, feeling really good going into Friday, we've got the gap down going down to 50. Really, we're only down 60 cents from our current position. And if I get stopped out at 49, I'm going to keep the stop at 49. If I get stopped at 49, it's just a normal loss there. And I think the loss is only going to be about 700. So less than 700 or 800. So less than the normal 1.2% risk. TNA entry was at 66.50. Again, we're feeling really good when we were at 69 here. Now, even where we're gapping down to is still above our entry level. So we're feeling pretty good here. Stop is all the way down to 62.50. For now, I'm going to keep the stop there, but I may move it up depending on how I like the price action today. So 62.50, we're still far away from that, and we'll continue to watch. And if I take the loss, it's going to be a normal size loss. So, we're in a good spot where we're not getting crushed on anything here. So don't worry too much here. Netflix entry was at 376, I believe. It's 376 something. And we were sitting nicely at 385. Now we're set to open again above our entry. Stop is way down here at 358. And then I'll decide if I want to move it up. But for now, we keep it at our regular stop level, and we're way above that right now. So still sitting pretty good. Apple. Stop is at 202. Entry was at 212.58. So here we're set to open lower than our entry level. Now, what I want to see on Apple, does it hold the gap level? And my stop is below the gap level at 202.58. I'm going to lower that to about 202 right now. Maybe even 201. Actually, let's say 201, 201.50. So I'm going to lower that a little bit by a point, which is only $100 more. So 201 is going to be the stop for Apple, and we'll see if that level holds. Maybe a little risk of getting stopped out here today. And then Team is the one that is closest to stop level. Was at 107. We let it slide a little bit to like 106.80 on Thursday. I'm going to lower this a little bit down to 106, and that's going to be a hard stop at 106. So 106 is the stop for Team, and looks like we're set to open around 108.50, so still above those levels. So you can see we're pretty good good on all these positions so far. None of them are hitting our stops yet at the open, and many of them are actually still above our entry level. So not too bad this morning considering what's going on. We're going to watch these key levels. I'm not putting any stocks on our focus list right now. Let's actually watch UVXY right now. And looks like, whoops. This is VIX. VIX is a fear sentiment, and it is popping. This is the inverse, and it is popping quite a bit. If the market will really start to move, I might take a shot at VIX. And then let's look at the FANG stocks. Facebook has been looking nicely. Does it hold this level here? Google had been crushed post earnings, was putting in a reversal candle. Does it hold the low right there? Amazon, does it hold the gap right here? And then, we've got Netflix and we've got Apple, and we already talked about those. So not really worried about stocks. If the market starts to improve, we'll talk about stocks. I will probably today do an intraday report. So expect that out later today, and we'll reassess what's going on in the market. But don't panic. Good decisions. What you can see here, we're not in a bad spot. So hopefully, I got some emails this morning. Hopefully, some of you have calmed down a little bit. We're looking decent this morning, and if we get stopped out, we get stopped out. But nothing is really gapping down below our stops, which is awesome. So, all right, guys, I'll talk to you guys in a couple of hours here after the market opens for a bit. We'll reassess what's going on in the market.